The underlying logic behind gold's accelerated plunge. A very interesting phenomenon occurred today. Gold plummeted while US Treasury bonds also plunged, with yields soaring. The accelerated decline in gold will inevitably attract many savvy investors who will point to the soaring US Treasury yields and claim that gold's drop is due to a collapse in US Treasury bonds. However, this might be the opposite. The real transmission path is more likely that gold breaks down first, triggering a chain reaction that drags down US Treasury bonds, leading to a rise in US Treasury yields and forming a death spiral. To fully understand this mechanism, we need to understand some of the tricks large institutions use when allocating assets. The following might be a bit mind-bending, so pay attention. Currently, the most mainstream, classic, and supposedly most stable asset portfolio used by institutions is to buy gold and US Treasury bonds in a certain proportion, touted as a double insurance against crises. This is because, conventionally, gold can hedge against inflation, protect against geopolitical risks, and hedge against currency devaluation. US Treasury bonds, especially long-term US Treasury bonds, are suitable during a rate-cutting cycle. Investors can capitalize on safe haven demand. However, they overlooked a crucial tail risk: Trump's use of the petrodollar. Against the backdrop of deflationary inflation, the simultaneous rise in real interest rates and the dollar, intended as double insurance, backfired, resulting in a double whammy. Both US Treasury bonds and gold came under pressure, triggering a mechanism. Gold broke down first, followed by stop-loss orders. Unable to withstand the pressure, gold portfolios simultaneously reduced their holdings of US Treasury bonds, causing yields to rise and further pressuring gold. This created a death spiral, accelerating gold's decline. Further analysis reveals a correlation between US Treasury bonds and US stocks. Market connections are numerous and the underlying mechanisms complex, not easily understood through simple reasoning. However, there's good news. Such a bloodbath is usually followed by a decent rebound. But beware of catching a falling knife. Proceed with caution. Follow me to understand the real world of trading.